Yo, what's good? It's your bro. Hold on, let me make sure I'm recording. All right, we're recording. Yo, what's good? It's your bro Lo, and I'm bringing you guys another saucy trading video. Today, we're gonna do a weekly outlook and as well as a trade breakdown of the cool trades that I took today on this fine Monday. So let's get right out. Before I get started, I am not a financial advisor. I'm your regular trader, regular guy that's not giving you any financial advice. So if you go twerk your booty for $5 and I have no power over you doing that, that is your dumbass decision. Okay, now let's get right into this video. What should we start with? I think we should start with the trade breakdowns first. Yeah, that would seem reasonable. So I took two trades, basically two ideas today. GU sells and GU buys. Okay, so when you look at our weekly, so we're just gonna go ahead and do a little quick weekly outlook video for GU real quick. So remember that our sell side liquidity that I think the draw on liquidity is this low right here, and also coming into this weekly order block with this FVG right inside of there. We also have some premium arrays with this daily order block here mixed in with this breaker from this right here, which looks like a mitigation block from this swing, but on a lower time frame it's a breaker. So yeah, so that's my premium arrays. These are my discount arrays that I'm kind of looking for it to draw to right now. So when you go to the daily time frame, you could definitely see that we do have these lows right here that I'm looking to be kind of like low resistance. So right here, this is the daily candle that we were on right here. So we're just gonna go to this day and see what happened on this day, and I'm gonna go over the trade as well. You can see how kind of like choppy all this price section has been for like the past I don't know why this is slow. Hold on, give me 1 second. All right, we is back. All right, so there we go. Way better. My CPU was going crazy. Let me make sure I'm recording. All right, so as you can see, we've been pretty choppy for like this past 2 weeks. You know what I mean? It's been very slow. You know, we're in December. It was November coming up into December, so you already know like this month is possibly gonna be kind of slow with order flow and price action. But you know, on the smaller time frames, you could get like really good scalps for right now. So looking at GU, we see that GU came up to a rejection block, which you could see on the 1 hour. But as you can see, there is this up candle as well right here. So if we just grab the body and the wick of that and we bring it over, we know this is an area, and as well as this down candle, which is a mitigation block. So we're looking at that, right? Let's go to the hourly time frame. Okay, so here you can see this is the hourly rejection block right here. You have an up candle, but you can see we aggressively ran through that and came to the rejection block. And then you can see that we had a little displacement lower. So this is today's price action. This was around New York session coming into New York. This is where I took my sells. And so this was my initial thought, right? We're coming up into this discount array. I'm bearish right now, okay? I'm bearish because of what's going on here, even though I know there's liquidity all up here, right? But you got to remember, my draw on liquidity is sell side liquidity. Let me delete this real quick. It's sell side liquidity, okay? So I'm looking for sell side objectives, okay? So once we came up into this rejection block and had a nice reaction off of there, I was looking at the 1 minute while we were up here, and I'm gonna go through some of the price action that was going on. So first, my mind is set around this right here, okay? So this is what I'm thinking is the initial consolidation, okay? Initial consolidation. You have a market maker buy sell model, right? Accumulation, right? Some reaccumulation, and then you have your smart money reversal in this fractal right here, okay? Yeah, in this fractal right here. So this is what happened, okay? You have a 1 minute stop hunt, breaker structure, and then you can see that it came back into this consequent encroachment of this fair value gap. So let's go to the 1 minute and just look at this real quick. Okay, so bear with me, guys. This is gonna be a pretty long video because I'm giving you guys my trades and I'm giving you guys a weekly outlook at the same time. So go ahead and smash that like button if you haven't yet, and share the video if you want to. So we see that price stop point break a structure here, and then I'm not going to do all the markouts, but you can see that it came up into fair value of this fair value gap right here, consequent encroachment, right? It didn't come into my area, my OTE, so I didn't take this. I was looking to take it, but it didn't come up into OTE, and I was still gonna wait to see what price did around OTE, right? I wasn't just gonna blindly take no sell, even though I have context to see what's going on. So after that happened, I went to a higher time frame and seen this nice sell-off right here during New York. Okay, it's fine that I missed that. You just have to understand what's going on with order flow, right? So I already know that this is a area that they reaccumulated to push up, and you can see that price push down aggressively right here. So what do? I'm looking for any PD arrays inside of here. I'm looking for an institutional confluence. Okay, so I'm not thinking price can come all the way up here because I don't want to see it come up all the way up there. The reason why I don't want to see it come up all the way up there because they already rebalanced. They already did everything they needed to do here. So when I'm looking at the 15-minute, you can see that there's a fair value gap, a SIBI, right here. Okay, that's our SIBI. I'm gonna make these red so you guys can see it a lot better. It's already red. My fault. Hold on, give me 1 second. So I'm gonna make my fair value gaps red so you guys can see it way better, and create a line right here. Okay, so you can see that this is the fair value gap that I'm paying attention to as price came down. Now it didn't break structure. Low, why didn't you wait for a break of structure? Yes, breaks of structures can give you more more context, right, and more confirmation when you get a break of structure. But I already got enough confirmation by seeing this run right here and this aggressively come down. So smart money is already telling me that they're in this move here, and this could possibly be a sell model to even potentially get down to here with all this imbalance and even take out these lows right here, because this is will be a low resistance liquidity, right? And remember, my context, my higher time frame draw is sell side objective, right? It's sell side. So I'm looking for these to be ran. So with that thought, with that thinking process, right, I'm only looking for it to at least come up into here, consequent encroachment, and then continue down. Okay, so looking at this, let's keep building context, right? We have our 30-minute order block, right? So let me go ahead and mark out the wick, and you could mark out the body of it if you want to too. The wick to the opening price, you can mark that out, but I'm not going to do that. So let's go ahead and do that real quick. I'm going to make this blue, and then when you look inside of this, right, what does this line up with? The open of that 30-minute order block. Here, let me go ahead and 30-minute OB open. Wick. Sorry, wick. Okay. Plus, what does it line up with? CE, which is consequent encroachment of this fair value gap. This is basically in between from the high of this to the low of this. This is basically close to the 50% of that fair value gap. Okay. So with that context, right, this is a high probable area that I can expect some sensitivity and to grab sells that to continue down with this market maker sell model. All right, what else do we have? We have this 30-minute order block right here. Right here we have that 30-minute order block. It's a hidden order block, so we can mark that out there. And this is my context now. So when I see price run up here, okay, coming into this fair value gap and this hidden order block, it doesn't have to come all the way in there. It could just tap into this order block if it wanted to, but I wanted to see it come into here, right? So once we came into there, I wasn't looking for no sell limit. You know what I mean? I wanted to see if price would hold this, especially because it didn't break structure. All right, so I wanted to see if price could hold this and see what price did inside of here. And normally what I look for is my model. Okay, so when you look into here, right, the market only does, my model only does three things: accumulate, manipulate, distribute. Okay, so when you look at this, right, stop hunt, accumulation, manipulation, breakdown. Okay, broke this low, I'm bearish. All right, so what I did here was when I saw this, right here, as soon as I saw this candle get broken, I put in half of my risk right there, half of my risk here, and then I put my stops just above here to be kind of safe. So like a 10 pips, I think it's exactly, or was it like 10.4? Let's just say 10 pips. Okay, you could go back into my journal and look at my stops and all of that, and look at my entries and on the MT4 and all that if you think I didn't take this too. But I don't really care. But yeah, like I was saying, so you can see that price came into here and did that, and this was my entry right here. I put half risk, and my targets was first a 1 to 2 risk to reward. Okay, so 1 to 2 risk to reward first, targeting these lows and a 1 to 2, and then the rest of my position I was gonna scale out below here, okay, and below here, because I'm expecting low resistance liquidity runs. Okay, and this would end my sell model. Now, even though I know that would end my sell model, I know that this can potentially, this London low right here that was formed in London, manipulate. This can be the end of the sell model, even though I'm expecting low resistance liquidity runs, because my higher draw is bearish. Okay, right? I'm bearish, right? We came from here. This is where I want to liquidate the most out at, in here. All right, so we got our targets, we got our entry here. So now let's see what price action did after it gave me my entry. Okay, so let's go to it real quick. So when price came into, okay, so look, price did the manipulation. I enter here, have my risk here. All right, let's drag this forward a little bit so we can have some room. Okay, and then when price broke down right here, okay, you see this SIBI, you see this fair value gap here. As soon as I saw this fair value gap get made right here, Jesus Christ. All right, let me make it red so you guys can see it. As soon as this fair value gap was made and it came into it and started respecting it, I entered my other half of my position right in here. Okay, with a 10 pip stop right above. Now you might ask me, why didn't I put it here? You can, okay, you can, but I wanted to give it a little bit of room just in case it did purge above this and then continue down, right? I wanted to give it some room. I know my stops are safe right here. It's safe right here too, but you know, I just wanted to give it a little bit more room. All right, so when you look at this, right, here's my entry, boom. Okay, so now we got our entry, we have our targets. Now let's watch price action and see what it does. Let's see what's going on here. Okay, so you see price action, right, broke down, okay, came up, and as you can see, let's go to a higher time frame so we could kind of like see what price is doing. Okay, now look at this. Let's go to the 5 minute. On the 5 minute, we have price breakdown. All right, and now we have our area where it's SIBI through here. Okay, this is another fair value gap right here. These two consecutive up candles, I'm grabbing a wick of that. Okay, this is a full 15 minute, this full 15 minute, 5, 10, 15 minute candle, up candle, right? Order block. So I'm gonna draw that out in time. You see how that lines up with almost a consequent encroachment of this fair value gap, right? Okay, we also have this up candle here as well, right inside of there. All right, so when price broke down, I TP'd 2% around here. Okay, so not 2%. I took out half of my position, so I secured 1% here. It ran down. Okay, now you could have secured more right in here, but since I already secured in here, I wanted to see it get to here, down below here. All right, now it started shifting right here. It did a little shift of structure, but I didn't really notice that at that point in time, right? Because I'm bearish. I don't really care about Judas swings like this. You know what I mean? I'm looking at for it to continue to get to my draw. So when price came up here, it took out these highs right here, built up liquidity, and look where it came into. It came into the fair value gap and that 15-minute order block right inside of here. Okay, the open of that. All right, so let's draw that out in time. Okay. And let's put the 15-minute order block. Let's put a color and consequent encroachment. Let's change that to a different color so we can see it a lot better. All right. So now that we have that, you can see how price ran up into it and broke down. What am I thinking? I'm thinking scaling. Okay. My entry, my stop loss is scaled down, right? To break even. Because we broke down, we had a displacement lower. I wouldn't expect price to come all the way up here when we're expecting the draw on liquidity to be ran down here. Okay, so that's why I'm not expecting for us to come all the way back up here. Now, you would probably say, Angelo, why would you enter here, right? When there's inducement right here, these little candles right here, right, for this order block here. Right, there's no reason for price to come all the way up here, right, just to take this and try to get to the draw on liquidity, right? There's no reason for it to do that. You have your reaccumulation here, smart money reversal. They reaccumulate it, and they reaccumulate it right, redistribute it right where they reaccumulated at. Okay, right where they reaccumulated at. So there's no reason for price to really come up here and take out stops. Or if it did do that, it would more likely make it more low probable. You know what I mean? For it to run this high instead. Okay, and that's out of my context. That's what I don't want to see, it come all the way up here. Okay, so no, there's no fair value gaps. There's nothing to rebalance, right? There's no reason for it to come up here. And remember, like I said, I don't expect it to come up here because of this. It's already balanced inside of here, but this is imbalanced. This whole range is imbalanced right here. So that's where I expect price to rebalance and then continue down. Okay. Same thing with here. Okay. Look, this is our highest up candle. We didn't come into there. Okay. Now look at here. Price came into here, broke down. Okay, maybe you didn't want to put no sell limit. Now let's go into a smaller time frame to see how that looks. Right inside of here, this is my scale in. This is how I scaled in. Okay, when price ran up, broke down, I know this is my up candle. Okay, now inside of here, there's really nothing to really rebalance inside of here. So I'm looking at all this to be ran and come up back into the FEG to do a return to RTO, right? So with that, what happened here? Okay, price came up, came right into here, and that's where I entered to scale back in. Right now, what did it come back into? Look, the consequent encroachment in the 15-minute order block wick right here. So that's where I entered here with my stops above 10 pips. Yeah, 10 pips to the high, right? So this was my stops, about 10 pips. Why didn't I put it up here? Because I wanted to keep it just a little bit safe, just in case price wanted to come up, wick above this FEG, and then close right back into it. So I'm giving it room to breathe. And then my targets was this low here. Now, as you can see, as you can see here, price did not, it did not, it did get a little continuation down, but it didn't reach my target. So this was break even. This was a break even, right? And this also came up to my break even right here. So as much as I got into these positions, I scaled in, I wasn't able to get the maximum amount of profit that I wanted out of this position, okay? Out of these positions, right? Because the delivery changed right here. The reason why I put my stops to break even right here is because this dipped down into a fair value gap. So this is like a fair value gap on a 15-minute, and you can see, look, stop point, break of structure. This was like a start of a new buy model. So that's why I put my stops to break even here, because the delivery started to change once it started breaking higher. Once this broke high right here, say this broke up right here and started to close on smaller time frames, then you can start to be like, look, I'm gonna cut half my risk. Say you didn't put it at break even, you wanted to give it some more room to breathe. But once we started closing above here, then you need to start thinking about managing your trade. All right, so this was the end of the sell model right here. It didn't have to take out these lows right here, but that's what I wanted to see, okay? But it didn't do that, and it continued up, and the delivery had a change. Now I took a buy as well. This is gonna be a quick, what's it called on the buy? Ignore this. This is spread hours right here, but this is the buy here. So right here, I can notice that we took out this low and we broke higher. Right now, I'm thinking, okay, the delivery must have changed. There's no reason for us to really come back up here unless we want to run some buy side liquidity potentially. That's how my mind is, okay? So once we took that run up right here, you can see that OTE lines up down here. You see OTE is here, okay? Keep that in mind. OTE is there. Let me grab that out of here. God damn it. All right, give me 1 second. Keep clicking the wrong button. All right, so OTE is around here, okay? What else do we have around there? We have a breaker, this up candle before the down move, and it broke through. Now, remember what I was telling y'all about breaks and retests, why breaks and retests are so really good if you see this exact thing right here. So if you're a retail trader watching this, look, take notes, okay? This inefficiency right here, there's no price action inside of here. When price ran up, there was no price action inside of here. From this wick high to this wick low, you have an inefficiency. So you have OTE with inefficiency, a FVG, fair value gap, and a breaker right here. Okay, now say you didn't want to enter. Okay, look, people, retail traders, they look for wick rejections. This is what I look for right here. Look. All right, what do you see? Accumulation, manipulate, okay? Then you see how price broke higher, the same exact time frame, broke higher. You see how the body still kind of respected this FEG here, okay? Broke higher, and then we came down to what? Mitigate right here. Came back into this order block. So we had a fresh order block made here. Okay, fresh order block made here. Price came down into it, and this is when I entered. When you go to a smaller time frame, this is what you can see. Let's scale down so I could give you a little bit more context of what's inside of it. Okay, you see how liquidity got built up here. I didn't enter when price did this. Okay, I entered as soon as price broke up and came into here, because I know that this order block should potentially hold. Okay, so I entered here when my stops right below here. Okay, you can see how I did come into a smaller time frame order block as well, and this as well. Okay, this up move, which is that breaker, right? So I entered there, and then my target was this previous high up here, or like close to it, but really that previous high. and then yeah, which would have been like a 1 to 3, 1 to 2. I think my stops was a little bit wider. Yeah, my stops was a little bit wider. Yeah, I had a 5 pip stop loss. Okay, 5 pip stop loss, right under this low, because I remember putting it under there. And then yeah, the run up right here, which was like a 1 to 2. So that's what I was looking for right here, 1 to 2, us to run this high. And you can see that price, the delivery, it came back down, used this as inducement, came into this balance, this FEG right here. Okay, and then you can see it turtle souped it, stop hunted it again, and then that's when we got our run up. And this was around market close, so I would have held it, but I went ahead and cut like half my position right here and left some runners going, right? And then as soon as around when market was closing and it started, you know, the spread started getting higher and all of that, I just went ahead and closed the rest around break even. So literally only pulled out maybe like 0.5% out of this, literally. So yeah, so not a bad day, 1.5% for a potential, you know, you know what I mean, like 4%, 3.5%, 4% or more, plus this trade, which would have been like 5%, 6% if it wasn't around market close and you know, spreads didn't go crazy and it could have got up to this high. So you know what I mean? So like overall it's a good day, you know what I mean, on a Monday, getting that profit, whether it's 0.5%, you know what I'm saying? If it's a Monday and you could get something out of Monday, that's good. So yeah, I hope you guys enjoyed this little trade breakdown. And oh yeah, I was supposed to do a weekly outlook. Okay. No, I'm not gonna do the weekly outlook. I think this video kind of ran a little bit too long. So I hope you guys enjoyed this video. Go ahead and hit that like button if you haven't yet. If you have any questions, go ahead and hit me up whenever you want to. I'm free. I'm an open book. And as well as no, I think that's it. All right, peace. I'm out.